just a pit stop. Now we go full throttle.
Garage gang, the engines are screaming, the track's slick as hell, and we're bringing the heat tonight. First up, the Bitcoin supply shock is locked, loaded, and ready to rip. You feel that torque roaring under the hood? It's me, your boy Avatar John, guiding this insane track tonight. Housing just smashed a 20.5% sales surge, burning hotter than fresh asphalt when the haters thought the engine was toast. And AI? It's straight up en fuego. Oracle dropping a $15 billion bond bomb. Nvidia and TSMC, that's Taiwan Semiconductor, the world's top chip maker, powering AI's heavy metal, cranking the compute, and Alibaba slamming the nitrous with Qwen 3 Max. This market's stacked with bangers, front to back. Smash that like, hit that follow. We break the market down so everybody eats. Stick around, because Christian's trench picks are in the house, and the kid's running red hot. They're calling him Triple X now, with dirty spins and a long-range missile locked for the moonshot board. Green flag. Welcome to Dirty Vegas. Let's kick it off with housing. It's blowing the doors off. New home sales exploded 20.5% in August, hitting 800,000 units. Prices climbed too. Median sale price jumped from $395,000 to $430,500. Volume up, prices up, full throttle. But here's the caution flag. Builders are fueling this with discounts and mortgage buydowns. Inventory still near 500,000 homes, and buyers are stretched with 6-7% mortgages. For Powell, this screams a hot economy, so the Fed's keeping its foot on the brake. So, for crypto, that means tighter liquidity and a slicker track. Let's get away. Speaking of big moves, Oracle's dropping a bombshell in the AI race. Oracle just pulled $15 billion from the bond market to build Stargate AI data centers with OpenAI and SoftBank. It's one of the biggest corporate debt raises of 2025, signaling they're all in on AI infrastructure. Why it matters. For AI and DePIN tokens, this is a green light. Legacy tech giants betting big validates the lane. But debt's a double-edged sword. If the economy holds, Oracle dominates. If rates spike or credit tightens, that $15 billion could drag like a parachute. While Oracle's loading up, crypto's about to get a cash injection. FTX is set to pay $1.6 billion to creditors on September 30th. This isn't just talk. Cash is moving from trust to accounts. Why it matters, trust and liquidity. Every payout like this patches the scars from crypto's biggest crash. Some of that cash will flow back into markets, fueling crypto's tank. For the garage, it's psychological relief and real capital returning to the race. But just as crypto catches a tailwind, Washington's throwing up fog. Prediction markets are pricing a 76% chance of a U.S. government shutdown. That's not chatter, it's a hazard. Shutdown means unpaid workers, frozen bond markets, and traders ducking for cover. For the garage, it's a yellow flag. The race doesn't stop, but expect volatility, choppy liquidity, and sudden spins. While Washington fumbles, the chip gain is stealing the spotlight. Intel's in talks with Apple for a US-backed chip revival. Chips are the new oil, compute's the battlefield, and national security runs on semiconductors. For us, this screams strategic. Every headline like this lights up AI tokens, GPU plays, and DePIN projects. The compute trade isn't a side bet, it's the main event. And America's not alone. China's flooring it with a beast of their own. Alibaba's stock surged 8% after unveiling Qwen 3 Max, a trillion-parameter AI model trained on 36 trillion tokens. This isn't playing catch-up, it's a head-on challenge to US heavyweights. Qwen 3 Max handles million-word inputs, pumps out 60 tokens a second, and outpaces Claude on benchmarks, even nipping at DeepSeek's heels. With earlier Qwen models already strong, this puts Alibaba in the supermodel AI class, neck and neck with OpenAI. They're backing it with $52 billion for AI and cloud over 3 years. Pure conviction. For the garage, 1. The AI race is global. 2. Compute demand keeps spiking, fueling GPU and DePIN tokens. 3. Investors rewarded Alibaba's execution instantly. This isn't hype, it's real. While China's burning rubber, The Fed's hinting at a lighter touch. Fed's daily signaled more rate cuts are likely, hinting the brake pedal might ease. Markets love it. Cheaper money, more liquidity. But housing data screams tighten, not cut. That clash fuels volatility. For crypto, it's drift conditions. Play the slides right and you can win, but you need the tools. As the Fed talks easing, startups are revving up new engines. Y Combinator launched an early decision track for student founders, meaning more startups, more AI, and more crypto overlap. For the garage, it's fresh blood on the grid. New narratives, new projects, new tokens. The trench pipeline stays loaded. And now, let's talk about the big one, the Bitcoin supply shock that's coming fast. Exchanges are holding 2.4 million Bitcoin, but only 20%, under 500,000 coins, are true customer deposits. With a bleed of 24,000 BTC a week, that pool's shrinking by nearly 5,000 coins weekly. Do the math. In 27 weeks, by late March 2026, customer reserves could dip to 350,000 coins. Picture the COVID rental car crunch. Normally, rental companies buy wholesale straight from factories, dealers just handling paperwork. But when supply dried up, they were stuck paying sticker prices in showrooms, competing with everyday buyers. Same deal here. As exchange reserves thin, OTC desks, who usually source off-market, get forced onto retail books. By May to July 2026, when total reserves near 1.5 million BTC, exchanges start sweating. If I sell this block, what's left for retail flow? That's when spreads widen, liquidity evaporates, and every bid sends prices screaming upward. The garage take, supply shock isn't hype. It's a ticking clock. March 2026 is the first squeeze zone. May to July 2026 is the wait a minute moment, where OTC pays retail prices and the market's torque goes vertical. With the market heating up, let's wrap the macro and get to the good stuff. Lights down, neon up. Tourney Vegas rules. Bring your tools or don't touch the felt. Axiom for prints, BullX for walls, GMGN for flow. No tools, you're just another drunk betting rent on red. These are roulette spins, not keepsakes. Plant Fund Solana, the Roulette Queen in cherry red. Scalp the pop, ghost the drop. Enter on Axiom Band, take profit at 20% and 30%. Hard stop at negative 10%. Safety checks, LP locked, no mint pause tricks. Top 10 wallets under 70%, taxes 5% or less, clean deployer trail. Crad Fury Solana, the dive bar siren with a coin flip grin. Nibble the wick, don't chase the candle. Enter on Axiom, take profit at 15% and 25%. Hard stop at negative 10%. Same safety checks. Triple X Moonshot, ARC, AI Read Complex, Solana's AI Compute Pit, Rust built, GPU job batching. Developers and miners earning ARC for real compute. Payments, staking, governance, computational mining, virtual machine, smart order routing, multi-chain plans, and Solana Foundation ties. Contracts now support GPU batching for tokenized AI jobs. Market cap swings between $17 million and $320 million, with 90% supply liquid. Risks, volatile, early stage, crowded field. But ARC has fundamentals most meme AI plays lack. Moonshot board, starter size only, add-on adoption, cut on stalls. With those picks fired up, let's hand it to the queen of the charts.
Garage gang, Lulu is on the mic with the pit lane readout. Let's keep it simple and straight so everybody knows the lines on the track. Bitcoin is running into resistance around 113.8 to 114.5 thousand. If it clears that and holds, the next lap could take us toward 116,000. But if it loses support at 111.8, the magnet is 110.5, maybe even 109 flat. Longs only make sense above 114.5. Shorts set up clean if we break down under 111.8. Ethereum's hood ornament resistance sits between 4150 and 4180. Break that, and we've got room to 4280. Support is down around 40.020 and 39.30. Lose that, and the slide goes toward 3800. That's your long above, short below trigger zone. Solana's been heavy. Resistance is at 213 to 215. Clear that level, and it has space up to 223. Support is 207, then 201. If those give way, the next catch is down near 193. Breakout long only above 215. Short setups are clean below 207. Cardano is the weakest of the four. Resistance is at 48.2 to 49.5. If it manages to clear that, the stretch target is 51 cents. Support is at 46.5, then 45.2. If that breaks, we drift down toward 44. The cleaner play is shorting pops into 49.5 or taking the flush under 46.5. And just so we are all clear, none of this is financial advice. I just call it like I see it. But I am a pig, and if you're taking financial advice from a pig, maybe you shouldn't be investing in the first place. Still, I can read charts and TA like the best of them. One more thing. Garage Gang, let it rip!